All right, we got to go back to that breaking news from Wall Street today. It was the second dismal day in a row. It was one of the worst days in history when you tally up the point drop for the Dow. It's third worst point drop in a single day, down 2,200 points. The S&P dropping 10% just in the last 2 days. The Nasdaq now officially in bear market territory. That's an overall drop of 20%. So joining us now is Brad Wright with Launch Financial Planning. Brad, thanks for coming in. We appreciate it.
Thanks for having me back.
Yeah, thank you, Brad. Okay, so first off, just your take on the market reaction today, provoking so much anxiety.
It's uncertainty. The market doesn't like uncertainty. I always said once we know what the tariffs are going to be, the market will price that in, but I'm pushing that out again because I don't think we know the certainty of the tariffs. Are they short-term negotiating? Are they longer term and really going to be an income stream, or is this going to be an all-out, trade war?
All right, we also took some questions from viewers, and this first one from Donna in Marlboro really applies to anybody who's either close to or in retirement. She says this: I plan to retire in 3 years. I just saw today's closing numbers, and I felt like screaming. I know I'm supposed to ride it out. Of course, that is the conventional wisdom, but I don't think I will regain these losses before I retire. Should I take my money now or let it ride and hope for the best? That is a tough call, right?
That is a tough call. So anyone who's got plenty of time left to work and is still contributing to a 401k, keep doing it. You keep doing it, you're going to end up like Warren Buffett, getting a deal as it goes down and it goes back up. But yeah, things are different if you're closer to retirement. She said 3 years left, which means she's hopefully still putting money into the 401k. So she can reduce her risk in the next 3 years of what she's putting in, of where it's going. Keep putting it in, but maybe there's a money market, a stable value, a something where you can build up, something that's a little less aggressive, so that will cover you at least through the first couple of years of retirement.
Because one of the issues is, you were mentioning in the first question, it's the uncertainty. Like Nike was up today, maybe because they're negotiating, we're told, with Vietnam, where a lot of shoes and apparel are made, but we don't know what's going to happen with that negotiation, so Nike might not be a safe bet come Monday.
Right. It could be a different country, or Vietnam could be off, or it's all in flux, which the fact that they are talking to Vietnam makes me think it is somewhat of a negotiating tactic. And if it lasts a month, okay. But if this really goes on, it's really easy to slow the economy and put tariffs on. It's really hard to restart it and take the tariffs off. So the longer those stay on, the more difficult it's going to be for us.
All right, well, we have another question. This comes from our viewer, Matt from Webster, who asks, my daughter's college fund is invested in YouFund. She's heading to college in the fall. Is she better off getting a loan for her first year at school and hoping the markets recover in the next year or so?
So I have a high school junior, so.
Yeah, it's very personal for you. And YouFund, we should point out, that is the state's 529. It's usually managed at Fidelity, I believe.
Yeah. So I have the same issue. Most people are in some sort of age-based target date fund in those funds, which means if you need it next year, it knows you need it, and it's automatically becoming more conservative as you're getting closer to that date. I would say like 80 or 90% of the people do that. If you've chosen your own funds and you've been really aggressive, you are going to have to get more conservative over time, but hopefully you're diversified. First quarter, S&P was down, small caps were down, mid caps were down, international was up, and bonds were positive. So that speaks for diversification, and hopefully in all your investments, including your 529 plans, you're diversified so that you can cushion any fall.
And you got to be careful with interest rates as high as they are, about especially student loans, which can have kind
fluctuate.
And be very hard to pay back.
Unfortunately, it doesn't sound like any great answer.
No,
honestly,
it's uncertain.
Yeah,
it's all unknown.
All right, thank you, Brad.